Hello, this is Jody Samuels, and welcome to the Global Market Analysis for June 24th. I should say the historic global market analysis in light of Brexit. So this is a post-Brexit analysis with a special Elliott Wave Desk analysis to follow. Please read the disclaimer to yourselves. It was a historic week, to say the least, as the financial markets embraced a shocking victory from citizens of the UK for a Brexit. Right before the referendum, investors were prepared for a risk-on environment in all of the asset classes. The pound was up, the euro was up, the S&P was up, oil was up, gold was trudging along at lower levels. Well, all of that reversed quite dramatically in the aftermath of the referendum results. As you can see from this chart, the market breakdown for the week, and if we just move our eyes to the last two columns, we've put in a percent change from high price to low price, as well as a percent change from open price on Monday morning to closing price on Friday morning. You can clearly see that the pound had a very dramatic move of down 12% from high price to low price, closing the week down 6.57%. All of the markets followed suit, and gold, of course, being a safe haven asset, gained 8.64% at the extreme to close the week up 3.3%. The last time the pound had moves of this magnitude was Black Wednesday, September 16, 1992, when the Bank of England was forced to withdraw the pound from the European Exchange Rate Mechanism, ERM, because the pound was under too much pressure for the Bank of England to support it any longer. I remember that day well, as I was working for a major investment bank in New York at the time. So this is déjà vu indeed. I'm quite certain that this historic week will be compared to that event in the days and weeks to come. In today's video, we will take a look at the key asset classes, the key asset markets that we've been looking at the last 5 trading days. And subsequent to that, I'm going to turn it over to Juan Maldonado, our Elliott Wave strategist for our ElliottWaveDesk.com, who is going to take you through the analysis on 13 markets that we do every day in our ElliottWaveDesk.com service. So stay tuned for that in just a couple minutes. This week was clearly a risk-on turn, risk-off environment at the extreme. This is the Euro 5-day chart, but it looks the same as every other chart that we're going to look at. And if you were involved in the markets leading up to the referendum, you would have experienced this yourselves. Prior to yesterday, the market certainly believed that the final vote would result in the UK staying in the EU. And you can see that from the euro moving higher. And then the reaction which followed, the market was totally caught off guard. Okay? Moving on to the pound had a more extreme move, dropping 12% from high price to low price, while the euro dropped 4.5% from high price to low price. Moving on to oil prices again traded in a choppy range, with traders fading the moves above $50, and of course traded down on Brexit, causing crude to drop almost $4 a barrel to a low price of $46.72, ultimately ending the week at $48.04. The S&P, which is highly correlated with oil, as we've been talking about every single week, followed suit, with the S&P testing higher levels into the referendum and then collapsing post-referendum. And of course, the FTSE and the DAX and other market indexes followed. As crude oil and equities rallied to start off the week, investors steered away from gold due to lower worries of a potential Brexit. However, that quickly changed as the results were released, and gold rose abruptly by $108 an ounce, off its weekly lows at $12.50 to $13.58, a gain of 4% at the extreme. So all of the moves subsequent to Brexit were a flight to safety, including a move into gold, which is why you see gold losing its inverse correlation with the dollar in this chart today, because typically gold is inversely correlated to the dollar. Gold up, dollar down. And this shows gold up, euro down. So dollar higher. Flight to quality, flight to safety. So that flight to safety included a move into gold and the dollar and out of risky assets. The risk-off environment will likely persist as the market digests the implications of Brexit moving forward. Now, stay tuned for a special video Elliott Wave analysis on 13 markets post-Brexit by our Elliott Wave strategist Juan Maldonado from the ElliottWaveDesk.com. And if you are interested in taking a 2-week trial and continuing to follow up on the post-Brexit wave count analysis, please go to ElliottWaveDesk.com and sign up for your 2-week trial. Thank you.
Good morning, traders, and welcome to the counting service for today, June the 24th, after the Brexit. The markets were extremely risky during the Asian session, and London session now for New York are starting to go sideways. On the Euro USD, we made a special adjustment where, let me explain what we did. Where after the move down and analyzing bar and lower time frames, we came with the idea that the price is likely to be making a triangle for the B wave. So that is why the price insight is so complex. So there is the plan that we are in the triangle. The price is likely to go down to the 107 area, then bounce up to test that resistance line again, and that will be the end of B. So in the meanwhile, we need to trade inside those complex moves. Now we know that we are inside of a D wave, and on the daily chart, the D wave has 3 waves or combination. The structure that we have picked for this D wave is an WXY, where each leg inside should be another 3-wave sequence. The 4-hour chart then, we're calling this first leg down as wave A, then a consolidation for B, and after that another leg down for the C wave. So in terms of the forecast, we were saying that when the price was here, was going to drop. So that happened, but it went below this level. That was the invalidation. So that's why we think 3 waves down, 3 waves up, 3 waves down everywhere. So 3 everywhere. That's why we came with the idea of activating the weekly triangle. Pound. For the pound, we were looking to find the end of the B wave black, actually expecting to see it higher. But the price ended the B wave. For now, we are going to be conservative, and we think that is spending another leg down in order to show divergence and everything, and we will see how it develops. But seems that the worst part already happened. Now we can expect sideways move to bring the awesome oscillator to the 0 line again, a new leg down to complete the 5-wave sequence, and then the new cycle will start again. We think that is going to the upside after that. But for now, be careful with the pound. Also, the spreads are huge, so it's pretty risky to trade the pound. And for the Aussie, it worked as expected. We were chasing the end of the wave 1. Of course, we didn't imagine that was going to be that wave 2 like that. So it went down strongly for the wave 2, and now is starting to reverse. So that could be the wave 2. This could be a V-shaped reversal for the Aussie, and the way to validate that's a 2, is to wait and see the 3-wave sequence after the first leg. Watch for divergence, breakout of the trend line, breakout of the previous high, next level, 1 to 3 reversal, and then we activate our bullish targets again. That's the only way to validate the reversal of a strong move down like the one we were seeing during the last hours. Dollar yen will also decide to activate the wave count on the weekly. Let me show you that we are in the wave X. It's hard to imagine a dollar yen below 100. Anyway, the price did during the Brexit this long weak candle to the downside, and now it's reversing. So we're conservative from in our view that this is a wave X inside daily chart. We're seeing the price pretty complex overlapping. So actually we're saying A, B, and C down, looking for the end of C. We think this is just noise of the market more than continuations. Anyway, with the move, we would like to see some divergence at the end of C. Hourly chart, strong, awesome. Sideways correction, it would be better if we have a new low. It's going to be hard to see it, but in case that the price just ended the move right here, that's another possibility, then what is going to happen is that we're going to have a 3-wave sequence, probably harmonic, and then breakout of the trend line, and we will know at that moment that, oh, okay, it was noise of the market and the price is ready to go up. But the good news is that we are having the information. Before we were thinking, is the UK remain in the Eurozone or they are going to leave? Well, now we have all the cards in the table and we can analyze better according to that. What about the dollar CAD? The dollar CAD was fantastic, the reversal. It did the B wave and then boom, it's going higher. We think that is making an impulse up, 1, 2, 3, 4, 5, to complete the next wave. But beautiful beginning of the move up. The Kiwi also was our favorite for this week. We were looking to validate the end of the wave X with a trend line, right? That was our guidance. The price closes below the trend line. Right there, we have the confirmation for the move down, and it hits the target. Beautiful, beautiful setup with Elliott wave. This one was our favorite for the week. What about the S&P? The S&P dropped, saying that the wave X ended. We were expecting the wave X a little bit higher, and after that they moved down. But with the Brexit, it helped to validate the end of X. So it seems that the S&P is in serious trouble, because it took the previous lows changing dramatically of trend after the Brexit. So we activate our bearish wave count. X is over. Nasdaq, we were following the wave 2. Nice move down as expected. And what about the Dow Jones? Dow Jones also ended the wave 5. So 1, 2, 3, 4, 5, boom, is in the next wave. German DAX. German DAX was crazy, that reversal, because we had a 5-wave up anyway. We're labeling this as a triple corrective because it moved below the 94.29. And let's see if it's going to reverse or what's going to be the next move. Anyway, we're following a wave Y, so mainly the structure that we're looking for will be like an A, B, and C down to complete the sequence. Oil, beautiful setup as well. We call the end of wave 2 by using the trend lines, pullbacks, double trend line inside. So all the validations were there. Our destination, the 45.98 on the 4-hour chart, has been activated. In terms of the validation of the structure, what we are looking to see is a 5-wave sequence. As you know, 5 means continuation, while 3 means continuation but to the other side. So we're waiting for that. Nice momentum, but it was a nice find of the top of the market for the wave 2. Also gold, we forecast at the end of 2 with watching the trend line inside. So there we have cross and the move up coming to the conservative target destination at the previous high area. What about the Russell? For the Russell, we're expecting at the up on for today a strong move down. So the target will be 1134. So we have been adjusting this a little bit, and the price is getting ready for this new leg down. That is the report after the Brexit. Thank you very much. Hope you are finding value in our analysis. If you have questions or comments, please contact us. Have a great weekend, and I'll see you soon. Take care. Bye-bye.